I will very simply put America first.
Make in India, make for the globe.
Until now, the India growth story has been one of the biggest of the post-pandemic world. Its growth rate touched 8%. Its benchmark stock index, the Nifty 50, has outpaced the S&P 500 since the start of 2021, at least until recently.
The shine has come off the India story a bit over the last few months. The stock market's fallen quite a bit over the last few months, and in general, growth has slowed down. So I think that that's the typical pattern in any country, and that we see that they only carry out economic reforms under some pressure or when they have their back to the wall.
And investors have started to look elsewhere. Indian equities saw almost $21 billion of foreign inflows in 2023, but they plummeted to just $124 million last year. And investors have withdrawn more than $12 billion so far this year. So has something gone wrong with the India growth machine? And if so, where? Are we seeing a slowdown or just a blip? Ruchir Sharma is the chair of Rockefeller Capital Management and author, most recently, of The Rise and Fall of Nations.
Ever since I've been investing in this country for over 3 decades, which is that this is a country that consistently disappoints the optimists and the pessimists. Yet over the long term, it's a very good equity market story in particular, because even after the Indian stock market's big correction over the last few months, the only stock market in the world in the last 30 to 40 years, which has produced comparable returns to America, has been India. So it's this very steady compounding story. But yeah, there are times when people get a bit ahead of themselves, the excitement gets a bit too much. I think we may have reached that point last year when India became the most expensive equity market in the world, literally, even more expensive than America at the top. So that was just telling you that the excitement had got into a head, and what we have seen in the last few months is a bit of a reset where the optimists are getting a bit disappointed now after sort of thinking that maybe India can break out and grow at 7 to 8%. There's a realism setting in that India's trend growth rate is closer to 6% rather than 7 to 8%, a pretty decent growth rate, and that they still need to carry out some positive reform steps to even keep a 6% type growth rate going. So I think what we're seeing just now is a return to that old reality, so to speak, which has been the case for India for 30 to 40 years, that it's a country which steadily compounds, steadily grows.
But that might not be enough to reach Prime Minister Modi's target of making India a developed nation by 2047.
I think we are reverting to around the 6%. Now, the blip downwards recently has more to do with the fact that we had elections across the board last year, and spending on infrastructure, which has been a big part of the growth story, has sort of faltered over this period. I think that will come back. So we'll get back to 6. Now, the question for India is 6 enough? And unfortunately, the answer is not, because we're also a country that's growing old. And we do want to grow rich before we grow old, and that's unlikely at 6%.
The Indian government has stepped up efforts to re-energize growth, announcing tax cuts in its annual budget in an effort to boost middle-income spending. Raghuram Rajan is a former governor of the Reserve Bank of India and says the big problem for India is a lack of jobs.
We have a lot of young people, and as a result, the dependency ratio, the number of very young people who can't work and very old people who can't work, that's falling. And this is the time that every Asian economy has experienced a burst of growth. But if we're still growing at the old 6% and not enjoying that burst, something is not working as well as it should, and that's jobs. What you see around India is not enough young people have jobs, not enough jobs are being created. So in a sense, we're not making full use of our capacity, even at 6% growth.
Some foreign companies have seen potential in the growth of the Indian market as an alternative to China. Apple has been slowly growing iPhone production in the country, while more recently Tesla stepped up hiring in India ahead of a possible entry into the market. This so-called China Plus One strategy of India being a substitute for manufacturing in China may have worked in the past, but some question whether it will in the future.
What I have come to realize in the last 12 months is there is a strange realization with the Indian policymakers that they cannot sell themselves anymore as a China plus one strategy. It has to be much beyond that.
Ritika Batra is Mahindra Group's Vice President of Americas and a senior fellow at the Atlantic Council.
Because if you look at it, the Indian consumer is not only inclined towards luxury and lifestyle products, unlike a lot of other emerging markets, but also has a very strong middle-class consumer base, which is also price conscious. So if you put these things together, where India is trying to sell itself as not just a China plus one strategy, but an innovation and manufacturing hub with a skilled workforce, with a solid consumer base, and trying to differentiate itself with available worker versus available skilled workers, I think it's a great story to tell.
Whatever the theory, foreign investors have not always had an easy time investing in India. Just ask Volkswagen. They were hit with a record $1.4 billion tax bill from the Indian authorities for alleged tax evasion. And the German automaker raised questions about the very survival of its India unit.
Well, because I think it's still a very difficult place to do business on the ground, David. This is something which we have felt for a long period of time, that to negotiate the Indian landscape is tough, given the regulations that you still have in place, given the fact that you can have the tax authorities or other people come up and present bills to you in a way that you don't really know. A lot of the state chief ministers in India realize this. And I think this is something which we need to focus on, which is that a lot of the attention is on Modi, the center, and what Delhi is doing and what initiatives they're taking. But India is a very federal country, and you have so many state chief ministers with a lot of power to do what they have to do on the ground. And I think what we need to see in India, and we're seeing some signs of that, is much greater so-called competitive federalism, where the states compete with each other to get foreign investment, because a lot of these regulations and the tough environment it is to do business in India is something that some of these state chief ministers need to make friendlier, and not just the center.
Whatever direction it's going right now, what is the current state of competitive federalism when it comes to economics? Are there certain states that it's more conducive to invest into in India today than others?
Well, that's been the case in India for a while now, that if you look at India, about 20% of India's population is in the southern states. And yet those states account for more than 30% of India's GDP. And the per capita income is also a lot higher. Now, there are states in the south, such as Karnataka, which we know well because of Bangalore, which is the tech capital of India for all practical purposes. And what we see there is that places like Bangalore and Karnataka tend to attract much greater foreign investment. And generally, some of the southern states like Karnataka and Telangana and Tamil Nadu, those states have attracted much more foreign investment over time.
There is a historical reason for why South has managed to sort of lead from the front. And those reasons are the ports that are situated in southern area. They were the most important reason for traders to come to India to begin with. And that led to a huge amount of trading community moving and living in south of India. In the recent past, we see Infosys taking a lead in ensuring that they become the global service providers for technology. And that started in south of India in Bangalore. And one thing led to another, where a huge amount of other tech companies started sort of launching based out of South India because of the skill availability of engineers in the southern part of India.
But even if India is moving to loosen restrictions on foreign investment, it is slow progress. And Rajan warns they might be focusing on the wrong sectors.
Prime Minister Modi is pushing to grow the manufacturing sector. Does that make sense?
I think the days of growing manufacturing to get strong growth in jobs are over. I think it's as true of India as it is of the United States. And the reason is simply this. that increasingly manufacturing is becoming much more automated, much more dependent on machines. If you look at an assembly plant for cell phones in India, it's a sequence of machines, not a sequence of people sitting soldering stuff onto motherboards. So the kind of jobs that traditional sort of low-skilled manufacturing, assembly, electronics assembly, and so on generate, they're far fewer today. But there are other problems. Every country wants to expand its manufacturing and is growing protectionist against manufactured goods coming from somewhere else. So the space for manufacturing exports is also shrinking. India has other opportunities in services. It's been a giant in service exports in recent years. That's where it should focus its attentions more on.
Modi's push to build up India's own manufacturing base comes as President Trump looks to bring back economic activity within U.S. borders. It creates a dilemma. Both leaders talk up their relationship with one another. But can Modi's Made in India and Trump's America First be reconciled? And if not, which will prevail?
Every country is turning nationalist now. And everybody is also has a certain sense of manufacturing fetishism. They want their own manufacturing industries. And of course, this collides. I think the way to reduce this gap is by recognizing that each country has specialities, and by working to ensure that there is more trade on those specialties. So, for example, lots of oil and natural gas being manufactured in the United States, India could buy more. There are defense products that are manufactured in the United States, India could buy more. So I think rather than seeing deficits, trade deficits as a problem, see it as part of a process of collaboration and just make sure that the playing field is level for both sides. I think that's something that can be worked on.